Hello, I'm Natalie Kenway, editor of ESG Clarity, and welcome to the Green Dream video series where we interview senior members of the responsible investment industry. Today, I'm joined by Nicole Vettise, Senior Vice President and Institutional Portfolio Manager on the Emerging Markets Equity Team at Franklin Templeton. Thank you very much for joining me.
My pleasure.
First of all, can you tell me the rationale behind the launch of the Templeton Emerging Markets Sustainability Fund last year? And is it something that you were seeing client demand for, sustainable investments in emerging markets?
Yes, well, certainly client demand is a factor. There's growing client awareness and demand for transparent and outcomes-orientated ESG solutions, such as our fund offers. But there also has to be strong investment rationale behind launching a fund. And it was clear to us that a combination of emerging markets growth, funding shortfalls to address economic development gaps, and growing corporate awareness provide attractive sustainable investment opportunities for investors. So let me expand a little bit here. The base case for an exposure to the emerging market asset class is of course compelling. We expect ongoing robust emerging markets growth over coming decades, given the positive forces of megatrends such as urbanization and demographics. And those in turn actually fuel growth around consumption, connectivity, and innovation. And these are key investment themes that we believe will drive attractive investment returns for investors in coming years. But this growth doesn't come without its challenges. And these challenges are highlighted by the UN Sustainable Development Goals, or UN SDGs. And here we're talking about challenges such as poverty. We have more than 1/3 of global city dwellers living in slums, rising inequality. In India, the gender pay gap is more than 70%, health and well-being, finite resources, and climate change. So the UN SDGs predict a significant funding gap in emerging market economies in addressing these challenges. And these really can't be met by government spending alone. And that's where private capital has a role to play. And that's happening, and we're seeing rising corporate awareness. So what we're seeing is a growing scale of investment opportunities to address these economic development goals, and a client need at the same time for an outcomes-orientated ESG solution. So our solution is to invest in high quality companies with demonstrative growth, but not at excessive valuation levels, and whose goods and services are therefore aligned to one or more positive social and environmental outcome area linked to the UN SDGs.
Fantastic. Yes, I wanted to ask about those. The fund is aligned to 6 positive outcome areas linked to the UN SDGs. Can you explain a bit more about that, please?
Yeah, absolutely. So the 6 positive outcome areas are adapted from the Cambridge Institute of Sustainability Leadership, and they're mapped to the UN SDGs. The 6 positive outcome areas bring simplicity to a complex agenda for global change, and they capture most of the purposes of those UN SDGs, while having the advantage of being smaller in number, so sort of easy to understand. And they focus on the outcomes that the economy should deliver to meet the goals, and hence the outcomes that investors are thinking about and might reasonably wish to see generated through their investments. So these 6 positive outcome areas are basic needs, well-being, decent work, healthy ecosystems, climate stability, and resource scarcity. And so what we do is we use a proprietary 3-pillar ESG inclusion framework, which we've developed to measure each company considered for the portfolio according to, number 1, its alignment to one or more of the 6 positive outcome areas, its intentionality, number 2, to maintain or improve the ESG footprint of the company's operating model, and number 3, the transition potential for improvement through engagement as active owners. And that final score helps determine whether the stock is relevant and should be included in the fund. So you can see we've got a very transparent, disciplined approach in identifying companies that meet our dual objective.
Fantastic. And can you share some insights of how the portfolio looks now, maybe some themes or stocks?
Yeah, absolutely. So our approach is, I should say, more bottom-up driven rather than top-down. So we aim to build a portfolio that's primarily driven by stock selection and also ensuring diversification at the portfolio level around country, currency, and style tilt factors. But the sort of underlying themes where that we see in our portfolio and where we find to be the most attractive in terms of opportunities are around aspects such as communications, consumer essentials, consumer finance, healthcare, education, and sustainable materials. So to give you a couple of examples, the sort of stocks that you'll find in the portfolio would include a leading telecom business in Africa that's connecting people and reducing inequalities, particularly with its financially inclusive offering, as well as a company in Mexico that manufactures and markets a wide range of paper-based products that are used for basic personal hygiene. In India, we invest in the country's largest healthcare services group. And in China, we hold a leading private education service provider that specializes in foreign language training, so primarily English, schools and school and professional test preparation, and online education. The students will range from elementary right through to university graduates. And the company has a nationwide network, and its depth and breadth in class offerings are arguably unmatched by any of its domestic or international competitors. And finally, with respect to climate stability, we invest in Jinji Solar, which produces and sells solar glass products. So Jinji Solar is really growing its market share in an area that has strong structural support. So for example, in China, the government recently shared its aim to be carbon neutral by 2060. And by 2030, it targets 25% of its energy mix to come from renewables. The company has stable growth margins, is quickly expanding capacity in the industry with high barriers to entry. So you can see that, remembering it's not only the positive outcomes that we're seeking, but also the strength of the fundamental investment case. You'll also find some more familiar names in the portfolio, such as TSMC, which actually is aiding in the transition to a low carbon future, given its leadership as a foundry for semiconductors. So you can see there's a mix of familiar and less familiar names, diversified by country, sector, and outcome area. And I think given our approach and the work that we've done in developing this proprietary 3-pillar ESG framework I mentioned, our investors are actually able to see the portfolio in a different way to traditional splits. So, for example, as a percentage split of the portfolio by positive outcome area. And we also share information around, quantifying or trying to quantify the positive outcome. So again, for example, we invest in a company around district cooling. So this is a technology that requires lower capex per refrigerated ton, lower maintenance, and it consumes 50% less energy. Therefore, it will naturally have a smaller carbon footprint. And it helped in 2019 to eliminate 1.2 million tons of carbon dioxide emissions. So you get a bit of a sense of the sort of stocks that we're looking to add in this portfolio.
That's so interesting. Thank you for sharing those. So we often hear responsible investment professionals discussing the lack of data or the poor quality of data. We're assuming this is emphasised in emerging markets. How do you manage that issue?
Yeah, well, when it comes to data quality, and indeed access to information, some emerging market companies are better than others, which is why we believe our local footprint is a crucial advantage when it comes to sustainable investing. So the fund is co-managed by portfolio managers Andrew Ness and Chetan Segal, and they have many years of experience in terms of investing in the asset class. But they're supported by the broader Franklin Templeton emerging markets equity investment team, and that consists of over 80 investment professionals across 14 countries. And it's their scale and expertise, their local insights, and the significant engagements that are key in overcoming some of those challenges around information gathering. Our experience of over 30 years navigating those market cycles in emerging markets has also helped us build considerable expertise in the asset class, as well as forge these important relationships with our investee companies. The analysts speak the local language, they're part of the local culture, the fabric of the countries in which they conduct the research. And our footprint really is key to being responsible stewards of our clients' capital and active engagement with companies. So we typically conduct 2,000 company meetings every year, and that really helps to deepen our understanding of companies and questions around ESG factors. We have management and industry relationships as well, and those have been cultivated, of course, over many years. And we benefit from timely and ongoing access, and not only from company management, but from business leaders, government officials, and central banks. So it means that engagement is a lot easier, but we're also able to educate on best practices. And we have a long history here as well. So over 10 years ago, we opened an office in Bucharest to manage a substantial mandate for the Romanian government. We advised the government on corporate reform, better standards of governance, greater transparency, and improved profitability. And it's through these reforms that we expect a boost in economic growth and profitability for listed companies. So we look to build strong relationships with our investee companies and engage with managements as co-owners of our clients' behalf.
And my final question is, and it's something we always ask our Green Dream interviewees, what is your favourite sustainable drink or snack?
Oh, so really a staple for me over the last few years has been Alpro almond milk. So, obviously it's naturally plant-based, so better to in terms of, better to consume that in terms of protecting the planet. But in lockdown, I would have to confess that my guilty pleasure has been a chocolate bar called Divine. And this chocolate is produced by a co-op of farmers in Ghana. So it's both tasty, but at the same time, you feel like you're doing something positive. So there's a positive outcome there as well.
Great. I love that chocolate too. Well, thank you very much for joining me today. It's been really good chatting to you, Nicole.
Thank you very much, Natalie.